Now let's look at the other very important financial report known as the income statement. Unlike the balance sheet, the income statement doesn't have to balance, first of all. Secondly, the income statement is not a snapshot in time that gives the reader the value of the company. But instead, the income statement tells a story between point A and point B. Now let's look at, it could tell a story for 1 month. What happened between point A, the beginning of the month, and the end of the month? Or what happened between the beginning of the quarter and the end of the quarter? Or what happened between the beginning of the fiscal year and the end of the fiscal year? That's what the income statement does. It tells you, are you really making money at this business? Let me show you. When you manufacture a product, let's take a guitar. When you manufacture a product, it's very important to understand two things. What's it cost to make that product? And then what's it cost to sell that product? When you're talking about what it costs to make that product, that's called cost of goods sold, okay? COGS, cost of goods sold. Now, getting back to guitars, we have a factory. We have wood that we have to buy. We have all of the craftsmen working on that guitar. We have to pay those, they don't work for free. All of their salaries go into it. The heat, light, electricity, the equipment, the sandpaper. And then once this gets to a point, we also buy strings for it, and we buy heads and other things from the outside to put on that guitar, as well as varnish. And then ultimately, it's a finished product. It goes into finished goods. When it goes into finished goods, that's where we have cost of goods sold. So let's assume that that guitar costs us $200 to make. Now we sell that, revenue, sales, of $400. The difference between the two is called gross profit, okay? And I'll explain what gross profit means in a second, okay? Now, in the income statement, if you only read it to this point, you say, wow, they're making money. Not necessarily. When we have a guitar and we're selling it, we have to pay salespeople, we have to pay distribution, we have to pay logistics, we have to pay a lot of things to get that product from point A to point B. And a salesman's salary, as well as the managers in marketing and sales, their salaries are not called cost of goods, do not get into cost of goods sold. They're called expenses, okay? We take sales expenses off of that, and let's assume it's $100. And of course, in any income statement, there's a lot more line items than that, but I want to give you a very top level, fundamental understanding of what an income statement does. All right, so now we have a profit of only $100. Now, on that profit, we have to have taxes of 10%, for example. At the very bottom, we have net income of $90. That's the money we made during the month, during the quarter, what have you. That's what an income statement does. It tells you, did you make any money? And takes into account what it costs between point A and point B to get that product into the hands of the customers. Thanks.